Hi, thank you for joining Tax Compliance in an Omni-Channel World. I am India Anderson. I'm a director within our product management team at Avalara. I have been here for 13 years and I lead our e-commerce and marketplace integration team. To start talking about omni-channel sales, I want to make sure that we center it around why your customers care. And it's a simple answer: money. Omni-channel matters for your merchant's bottom line. Centralizing omni-channel maximizes profitability, and managing omni-channel data is complex, which is why you care about it as an app developer. Centralizing your data from all of your sales channels enables you to more efficiently manage your inventory, manage purchasing, and manage replenishment of that inventory when supplies are low. It can also enable you to appear in stock much longer than if you were not centralizing your data. We're going to talk about a customer. My customer is Joe's Footwear. Joe is a footwear shoe manufacturer in New York. His omni-channels are a retail store, the physical store in New York. He also has a website, and he sells on quite a few marketplaces. Joe has three things that really matter when he is thinking about reporting. He has product taxability, specifically because in general, apparel in New York is not taxable if it is under $110. And so he needs to make sure that all of his sales of apparel that's under $110, where he doesn't apply tax because of what is being sold, is tracked as a sale of apparel in every system where his order data is housed. He has a combination of direct and marketplace sales, which means he doesn't remit tax everywhere that he makes sales. He also has a physical location in New York, but doesn't necessarily have nexus everywhere in the US. Joe also, because he does make shoes, he also sells to other retailers. So some of his sales are to exempt entities. This means that he needs to track who he made the sale to in every system where he has that sales data, so that if a sale doesn't have tax applied because the entity who purchased it doesn't pay tax, that is tracked for his reporting needs in case of audit. So what does Joe need? Well, Joe is filing returns in New York, so he needs to report and remit his direct sales in New York. He could be meeting economic nexus thresholds in all the other states, so he needs to ensure that when he's sending his data to Avalara, he is sending all of his sales data, both his direct sales in his retail store and his website, and also the sales that occur on marketplaces. So Joe needs to calculate on some of his direct sales, but report all of his sales. And the sales that came from a marketplace, he doesn't need to send those sales to Avalara through your app, because he's pulling them from the marketplace directly into Avalara, just like he's pulling them into the financial platform that you are connected to. Now, what does your app need to support Joe? Well, end sale. You need to calculate tax and save those transactions in Avalara. For the retail store, you need to keep the tax amount that was already applied with a tax override and save those transactions in Avalara. And for marketplace, you need to use the tax that was already applied and don't calculate and don't save to Avalara. So that is 3 separate configurations for 3 different business needs. This leads us to design considerations. There are 3 basic things you need to know about the sales that you are managing within this omni-channel ecosystem. You need to track at a basic level whether what the tax amounts are, whether those tax amounts are final, and who remitted the tax. For marketplaces sales channel, it's typically the marketplace. For other sales channels, they could be a final sale when they're brought into your app, or they could be a sale that just has tax for the purpose of offering an estimate. So you need to know whether it is estimated or final so that you know whether to calculate. And you also need to know whether your app and your connector needs to save that transaction to Avalara, or if it has already been reported to Avalara from the original sales location. And then within that data, of course, you need to know the what, the when, the where, and the who. Now, for the what, when, where, who. This is important because these details impact how tax is reported. The what and the when matter specifically because taxability applies based on what was sold. So the SKU, the UPC, the item code, etc., that merchant is using to track that unit, we need to make sure that data is available. And then if they're using Avalara to calculate tax, of course, that Avalara tax code also needs to be sent to Avalara on that transaction, or the item code could have a tax code that's managed within our item manager called What You Sell in our UI. The when matters because taxability can have a special 0% rate on a holiday. So in a state where our example merchant, Joe, is selling shoes and there is a back to school holiday, that back to school sales tax holiday weekend would have no sales tax applied to shoes. It is very typical for those to be non-taxable on back to school. And the sales that are not on the holiday would typically have tax. So the what being that it was a shoe, and the when meaning that that specific date that happens to fall on sales tax holiday would be important pieces of data controlling how the tax is reported. We also have the where and the who. Now for omni-channel sales, where is two components. Where is definitely the address where the sale occurs. So typically we think of that as a destination address. There are some states that utilize the origin address or a combination of the origin and destination address to determine the tax jurisdictions. So where, meaning the addresses, you definitely need to send that to Avalara and ensure that you have that data in your app. The where also, in this case, omni-channel sale, where the sale occurred. So if the sale did occur on a marketplace, you need to track that because what channel the sale occurred in can control who actually remits and reports that order, the tax amount. The who matters because, like in my example with Joe, where he's selling to some retailers who will resell the product, who purchases the product can control whether tax is applied to that individual sale. So the who needs to be tracked all the way from that original order system through to the final reporting. Speaking of reporting, we have some reporting considerations. First, to calculate or not to calculate. So you do need to track for reporting whether the transaction includes tax that was considered as final or as an estimate. We recommend that you flag as your orders are coming into your app whether that tax was estimated or final at the order level. And then you would only calculate tax on estimated orders. So your app would need to look for the flag. Should this order get tax calculated? If it's an estimate, yes. If it's final, no. And to extend the data, enabling that data to be sent to Avalara, we recommend that you enable within your app to control whether individual sales channel orders are sent to Avalara, saved to Avalara at the channel level. So track whether a sale has final or estimated tax at the order level, but track whether something needs to be sent on to Avalara at the sales channel level. And specifically for marketplaces, we recommend that you use marketplaces on orders that are marketplace remitted, especially because that marketplace data is handled in a special way. Specifically for marketplaces, we have a few things to consider. So they have unique reporting and remitting requirements. Typically, the marketplace themselves will report and remit the sales that occur on the marketplace. Data from a marketplace usually equals final sale. And so if you are saving a transaction from a marketplace to Avalara, we recommend that first you utilize a tax amount override to ensure that the tax amount the marketplace assessed on the sale is the tax amount that is sent on that transaction as it is saved to Avalara, and that you use a marketplace location so that for marketplace sales, you can view them in marketplace report. And if we are filing returns for that merchant, the sales tax return will show those marketplace sales in adjustment for marketplaces specifically. Marketplaces are incredibly complex when you look at the variance from state to state as to how those marketplace sales are reported and remitted, and also how the data is tracked against the individual merchant, who in this case would be a third-party seller. This map of the U.S. shows two important details. In blue, we have the states where there is both marketplace remittance required, meaning that the marketplace is going to remit and report the sales tax for all sales that occur on their site. And two, we have the state in light gray, where the marketplace is responsible. They are the reporting and remitting party. But for the purpose of the data that that merchant needs, the third party seller in this case, Joe, Joe would not include the marketplace sales in the economic nexus threshold with those states. So Joe would need to ensure that for the sales that he was saving in Avalara, any marketplace sales were marked as sales that occurred from a marketplace, because it varies from state to state whether or not that state's economic nexus threshold for remote sellers includes marketplace sales. You can see why your app including a marketplace location on any marketplace sales that are sent to Avalara and keeping that original tax amount are so important. It's difficult to track this from state to state. It is much easier to let Avalara track that for you. So that's why we recommend keeping the tax and setting the location at the channel level so that the merchant, Joe, can view their data using Avalara's report. We do need to talk about some onboarding considerations for your users. Within channel management, you do need to have some specific app configuration. You need to enable your users to manage the sales channel. So they need to select whether they want to calculate or save transactions independently of each other. Some channels have final sales, some channels have estimates only. And you need to know whether your app will support marketplaces in the Omni-Channel data. It's almost certain that you will be supporting marketplaces in Omni-Channel data. If you are, then make sure that you enable, especially marketplaces, to have a reporting location assigned to that marketplace sales channel. You can use location codes in all sales channels, but specifically for marketplaces, we recommend that you use marketplace locations so that the data is appropriately tracked as a marketplace sale rather than direct sale, and so that it can populate our marketplace report and the appropriate areas of our economic nexus considerations, and also any returns that we file for that merchant. And please forgive me for my very, very rudimentary skills in UI design. It is essentially just calculate CAC, yes or no, save transactions, yes or no, and then having a reporting location available for each sales channel. We think back to Joe, our example customer, that would be a retail sales channel where he is saving transactions to Avalara, but not calculating CAC. He has the web sale where your app needs to calculate CAC, but also needs to save transactions to Avalara. And then for the marketplace, again, the sales were final, so there is no CAC calculation required. But here, Joe may or may not want to save transactions to Avalara. If Joe is saving to Avalara, we need to make sure that those are assigned with a reporting location. And now I'm going to show some information from our website so you can see these reports and transaction model real time. So here, I'll start with our sales tax summary by marketplace location. Again, this is just a very summary data. However, I want to show that, hey, for those sales that occurred in marketplace A, Joe can easily see that it's a marketplace sale because the location was applied to that transaction, and therefore it populated our marketplace report. That marketplace is set up so that every state is remitted by the marketplace, so you can see it is marked as marketplace remit tax. And you can also see the total sales for the period that's covered by this form. This is a sale that occurred in August. This is showing sales for the month of August. And so Joe can see the marketplace sales at a glance quite easily. When we look at the way that data is shown related to economic nexus, Joe can see that quite easily within the economic nexus threshold for remote sellers, which is on the home page of Avalara's website. This populates with the sales data for transactions that Joe has saved to Avalara, and it reflects whether or not the sales that Joe has made into these individual states have met the threshold of that state or not. So in this example, we can see that Joe has met the threshold for remote sellers in the state of Colorado and in the state of Georgia. And if we click to see details, we can see how Joe has met the threshold. In Colorado, his sales are over the sale value limit. During this year, he has sold $200,000, and the sale threshold is $100,000. And for Georgia, again, he has met the sales threshold. He has sold $161,000, and the sales threshold in Georgia is $100,000. If the individual state did not factor in marketplace sales into those economic nexus thresholds, by including the location code, marketplace location, on those transactions as they're posted in Avalara, they will be omitted from the thresholds that are monitored within the Avalara system. So again, very important to track the location code for marketplace sales, and very important to ensure that your merchant is enabled to send the data from all of the sales channels that they are managing in your app to Avalara if they choose to do so, so that they can see one complete view of their sales. Within the Avalara ecosystem, I also wanted to highlight that for a merchant like Joe, we do have a tax code lookup. Again, that taxability for a merchant really manages the taxability of the individual item sold and is particularly important for the purpose of audit. And so that tax code, which could be stored within Avalara or could be stored within the app, you need to ensure that that is transferred to Avalara in that transaction when it is saved, and of course when it is calculated, so that that data is possible to utilize in reporting and calculation. When you are sending a transaction to Avalara, I will highlight here, this is our Swagger UI. You can get to our Swagger tool at developer.avalara.com to try out all of the features available via our REST API. You simply log in with your Avalara user. And you can see here within the transaction model, I have included Joe selling some lace boots. I have that tax code for boots sold to a consumer included in the transaction. That sale is a sale that occurred in his retail location, marketplace location. And so I have the tax override amount included here of $10 because that is the tax amount that was included on the original sale. And so when this transaction is posted to Avalara, it would reflect both the original tax amount and the tax code indicating that this tax should be applied as a boot tax. This transaction occurred in the state of Washington, and so it doesn't have the threshold requirements that we referenced earlier in New York. And these are included at the order level. You can include the tax override at the line level and the item code and tax code at the line level for the purpose of calculation and reporting. If you have any questions about the topic we handled today, again, we went over the omni-channel sales and what data you need to report, including the what, when, where, and who. Also enabling your users to manage at the channel level, whether sales are staged to Avalara, at the order level, whether calculation is required, and ensuring that marketplace sales have a marketplace location assigned. Please follow up with us. We will have a question portion right after this. Thank you.